All right, my next guest says that AI job displacement has already begun, and it's going to get a whole lot worse as productivity gains will cure to capital and platforms, and unfortunately, not to labor. So let's bring in now Entrepreneur Shares COO, Ava Ottos. And Ava, what about people who are sort of saying, okay, this is scary stuff. You're saying unemployment could hit 20% in the next 5 to 7 years. They're saying, yeah, but there's a flip side to this, that there will be new industries, new jobs, new occupations that will be created that don't even exist right now that can offset this.
Yeah, hopefully, but I think for the short term, it's going to get worse before it gets better. So we're going to lose more jobs than the jobs created, we believe, in the next 1 to 5 years. And then hopefully there will be more industries. What's interesting is that people who are into AI, they say they work more now with AI because they're so much into it. Right. So that's an interesting perspective.
It is. They say the people who master it would be super productive, right? But those who don't won't be, although some people are saying, why should I learn if I'm not going to have a job? I think the offset is, like, if this is the case, and I don't doubt you because I think there will be a gulf between those jobs created, we got to be in the market. So let's talk about how to make some money. Ubiquity is a name that you like. I've loved this name for a long time. It's finally, in my mind, getting some nice traction. Just recently made a big move here on the verge. If it breaks out here, I think technically it's going to be huge. But you've got some fundamental reasons. I want you to share these with the audience, why you like this company. And obviously, it's actually trading much better than the industry.
Yes, I like to call it the picks and shovels trade. So a lot of focus is on OpenAI and semiconductors, Anthropic, all these companies, the fancy companies. But this is the picks and shovels of the industry. It's a networking hardware company. As we say, revenue growth is 39 compared to 19% of the industry. That's double. Their EBITDA is 72 compared to 31% for the industry. And the net income margin is 30% compared to 8%. That's 4 times the rest of the category. But at the same time, it's priced in line with the rest of the category, so we believe it's a great opportunity.
This right here is really huge. I don't know how you pull this off. That's just great management right there.
Exactly, that's it. They're taking away all the market share.
Wow. All right, so let's talk about another one here. This is a name that we've talked about on this show a lot the last few years, Vertiv. And it's interesting, outside of that, tariff tantrum, and then maybe late last year, it's been on a tear. Recently, it's made a huge breakout. And it's interesting because you say you can still buy this stock. So again, let's look at the value proposition that you're sharing with the audience here.
Yeah, again, this is another picks and shovels play. It is AI needs powering and needs cooling. So every hyperscaler needs Vertiv's equipment. That's where it comes in. Now, the most interesting statistic is in the net income that grew from 0.5 billion to 1.5 billion, whereas the rest of the category barely grew by 7%. So again, that's another company.
This is a monster number.
It's a monster number.
Crazy.
It's taking away all the market share.
I also saw your notes. They were losing money not long ago, and now their earnings are surging.
Correct, exactly. And we like that. We like when an entrepreneurial company is moving from not being profitable to being profitable.
Let's talk about Axon because this is, again, I used a long-term chart for this. This is one of these names I was in. Of course, I had a different name. You'll tell a story. And I don't know why I sold it, except that we had some profits. But now it's making a series of lower lows. And I'm not, that kind of concerns at least the technicians out there. You say this offsets that. The fundamentals of what we show be looking at.
Yes, definitely. And I like it that it's lower now. I think I like it here. And I think it's a very timely company as we see more and more law enforcement agents being under scrutiny. So they provide the hardware and the software, as you know, to attach on their uniforms. So I think it has.
Where are they making the money? But from all the data that they collect, or it's just all of a sudden the value proposition on this changed about 7 or 8 years ago.
And they changed their name too. So from raise. So you're right. So but this is, I think there's more and more focus on public safety programs, and that's where Axon comes in, and they have so many contracts. And the interesting part is that the revenue retention is 125%, which means they keep them and they increase them.
They keep them increasing. I mean, you got a backlog of $14 billion. So really amazing. Of course, I had to ask you about this. SpaceX, thinking about an IPO. We know it's going to happen this year. Maybe happen sooner rather than later. June has been mentioned, but I've seen even people talking about April. $1.75 trillion, the biggest IPO ever. You've been buying this for folks through your fund, right?
We have 205 million in XOVR ETF. It's our by far biggest way. We just had a press release on that. It's valued at the last tender, so at 1 trillion. So we think our shareholders are going to do great. We believe if the rumor is correct, this will be super exciting news, maybe the best news we had in many years.
Many IPOs have been dead on arrival recently. This one, you think will live up to the hype?
I think it will be the Magnificent Eight.
Even if
It's
Magnificent Eight.
Yes,
Mag 8.
and by the way, the best Magnificent, because they have a huge moat, and the rest of Magnificent are now struggling with AI. We see Google and Microsoft both struggling. This one has a huge moat. There's another company like SpaceX will be the company in the future.